Mining stocks are publicly traded companies focused on finding, extracting, and processing deposits of valuable minerals and materials. Now, these include precious and industrial metals, construction materials such as sand, energy materials such as uranium, and fertilizers such as potash. I think you're getting the picture here. However, the mining industry is cyclical. Demand for mined materials tends to fall when the economy slows down. Mining stock prices typically decline during a recession. But latest data suggests the UK might miss a full-blown recession. So what is the future for mining stocks? Well, at the coalface is the chief executive of Panther Metals, Darren Hazelwood. So Darren, from where you're at and talking to your peer group, what does it feel like?
I think we've got a serious disconnect at the moment, Sarah. There's a huge amount of positivity inside of the industry. I've been to many events over the last few months, and everybody can see across almost every single commodity a supply crunch, and that supply crunch is imminent. This isn't something that we're now forecasting for 10 years down the line. We're looking 2 to 3 years across almost the entire commodity belt. Yeah, something that you mentioned, potash as an example. You've got the mine up north, which you'll be well aware of, Sarah, up in North Yorkshire. And this is something that's short, and that's before we start talking about the drive for the security of gold. What we're seeing, governments picking up, building. This year will be the second highest on record for central banks buying gold purchases over the last 80 years, and that's only going to be behind last year. And so it gives you from the very bottom all the way through. There are major issues within this sector, and that's not being reflected in the market because times are tough out there, and the risk capital has definitely come off the table. That's not just in the UK. You've seen the same in Canada. You've seen the same in Australia. But there are definite signs that risk capital now is starting to feed through in the market. It's early signs. We're talking about early shoots, but the realities are, chatting even this week to a commodity trader, he's seen a number of his colleagues taking the small margin in the oil sector, and that's a huge sector. And they're building up their networks and their connections within the hard rock mining industry because they know that the margins are substantially greater. But not just that, they also can see the drive towards net zero, and that seems to be kind of a focus around that. And it is becoming the king's clothes. Everyone can see it, but the market isn't reacting to it. But ultimately, the market does catch up, and it can catch up in no time at all. Well, what's going to be that trigger? I think that's the question that I'm hearing and discussing the most. What is going to be the trigger that actually gets this market and this sector moving? Because ultimately, it's the juniors, the micro caps. They're the ones now that make the discoveries, and the majors come in. They buy those discoveries. That's their business models. Has been for pretty much the last 10, 15 years, and you've seen no change in that, despite the fact that you are seeing the majors starting to build up their exploration teams because they're being forced to, because the capital isn't getting down to the juniors. But as a result, when things contract, the harder that contracts, the bigger that will explode, and that's what we're going to see. When, we don't know, but we are on the cusp, and we must remember, Sarah, it's darkest before dawn.
Yeah, fully understood there. So we need to talk about your business model in relation to that, and whether your business model is flexible. And to remind new potential investors, what is it that you are exploring for that's critical to economic growth?
I think it's important for me to thank my investors actually, up to this point. It's been a tough run in the market. We are one of many that's price has suffered. But I have taken a decision to control the business's cash burn, to make sure that we're not absolutely destroying our share capital, because we're so close to a trigger point that to destroy your share capital in this horrific market, now that would have been criminal of us to have done that, because that means we're doing that to existing investors. We are seeing signs that's going to change in terms of moving the business forward. My plans are very liquid. We're seeing some opportunities that we're seeing due to a bad market, but they would surprise people. I think that'd be the right term. And we've got to be flexible enough to be able to look at those opportunities. However, within our own portfolio, we've never been more confident with our own portfolio, and we strongly believe that we've got a discovery within there, and we don't need to do anything outside of what we're doing at the moment. I know the route forward. I haven't communicated that to market. That's because there are moving parts within that. I think we're getting very close to being able to communicate to market exactly what our plans are going to be over the next 12 to 18 months. And it will be over that kind of period. And because the business and our assets have deserved protecting. We've been in a scenario where we could potentially have doubled our share count to do a couple of drill campaigns. Well, we need to be more robust than that. And we need to make sure that if we're looking for a discovery that transforms us from our existing asset base, that just 2 drill programs won't crucify our share structure. And that's what we've done. With the other side of that now, the market isn't seeing that, but it will. And I'm really happy with where the business is at. I'm not happy where their share price is at, but then a lot of those factors are beyond your control.
And I'll just ask you again, what is it that you're exploring for that is crucial to the economy?
We're looking for nickel, copper, gold, zinc, platinum, palladium, and nickel in the same area. Almost all of them are linked to to net zero, apart from gold. That's a separate project, but that obviously comes into providing some security in terms of economic fallout as well. So we've got a mix, but not as big a mix as you might think. And we're confident across the portfolio.
So that's quite a heady mix. You listed a lot of materials there, a lot of resources, and you were in Canada recently sending back lots of short videos, which I was watching on Twitter. You were cradling a lump of rock, and I wasn't sure whether it was a metaphor or whether the rock contained most of those materials that you've just outlined.
When I get those results back, I'll let you know. But no, we're very pleased with that visit. The visit to Dotted Lake was about logistics, and we also needed to confirm a couple of things from the historic reports from the area before we actually implemented our drill program. And our next stages now are to put in the applications for that drilling. We're in communications with the local First Nations group at this time. We want that process to be smooth. We want the process to be inclusive. It's absolutely imperative that the local First Nations feel part of the process and they understand every step that we're going to take and how we see things developing. how we see our access onto the land, and and that's how everything globally is moving, and that's how it should be moving. You know, I wouldn't want somebody turning up in my backyard with a drill rig and suddenly um, doing their thing. And we have to be very respectful of that on the flip side, and that's what we're making sure we're doing. But what I'd expect those applications to be in very, very shortly.
You went and had a powwow with the First Nations last August. So when you were there just a couple of weeks ago, did they remember you?
So this was actually a different First Nations group. So this was from the Dotted Lake property, which is over you got Pick River over that side, and the powwow last year was Gold Bay's powwow, and they're linked to the Abonga Greenstone Belt. Well, we've got the Wishbone property, Awkward, Ottertooth survey. It's the VMS camp. So I'm sure they'll remember me from last year, and in fact, I know they have because we've been in communications this year. And in fact, the other First Nations group that we deal with on the Bonga, White Sands, I've recently made inquiries about their powwow. It's time for us to get face to face and having discussions with the First Nations in the area, and I might even be able to combine both again, which I'd love to do.
So you talked about reducing cash burn. What is the most capital intensive part of the business, and how are you reducing the burn?
So one of the main flexible costs you've got within Explorers is actually probably your PR budget. We run a very lean ship, so we're only burning capital generally when we're on site. In fact, I don't mind saying this. Our entire wage bill it would be well under £200,000 for a listed company. That's good, and for the quality of the board we've got.
A year?
And it would be
Is that a year, a month? That
a
200?
year per annum. Um, and what we've done with the money that we've put into the ground, we've proven via results. The market hasn't bought into that so much, but I can tell you now for certain the industry has. We've got big players looking at what we're doing on a bonga, and we're pleased with where we're at. As I say, you're striking the balance between a market that is almost punishing success to try to pick the moment where you can actually say, right, now we stick the, yeah, it's almost sailing through the doldrums. You know, you sat there for time immemorial, it feels like. And then suddenly you just get that breath of wind and you have to hoist that sail and you have to go for it. And then you break out the doldrums and you are sailing for home. And that's where it feels like with Panther at the moment.
So in terms of hoisting up the sails, which mining stocks do you think can weather future economic storms? I mean, I'm thinking about, big tier one Barrick Gold, because they're neighbours of yours. Do you lump yourself in with the mining stocks that can weather the economic storm?
Well, the majors are different types of players, but we've got Barrick to our south at Dotted Lake. We've actually got Glencore that now neighbour us at Dotted Lake, and I'm sure that they've got their eyes on us. I know Neil from Palladium One definitely has, and we've got BHP up at Abonga. They worked there previously, and you know they're aware of Bonga exists these days, and you've also obviously got Valet or Vale. I prefer Vale, but it's Valet who own Lac Deals mine, and they're always on the lookout for opportunities. And we've obviously got Awkward up on a Bonga as well. So the companies are looking, but you had BHP recently at the Bank of America conference, and they're seeing sort of the China and India being the stabilizing factors in the global economic growth cycle, and they're starting to see that feed through. So it's an interesting comment for them. And both countries are commodity giants in terms of their manufacturing industries and what they use and what they'll process. So, you know, when those guys are starting to warm up, then the world's going to start to warm up in a metaphoric term. And you've got Tilman Galler from JP Morgan. You know, he's seeing the climate change policies leading to a huge shift, and that's going to create large redeployments of investment and capital that's got to come into the mining industry. None of this works without mining, and all of these commodities are coming under huge pressures, or they will do over the next couple of years. I, I tweeted actually over the weekend. I was at an industry event last week, and somebody was talking to me about and I had to almost corner the guy, bless him, because he made a throwaway comment. He supplies into the family funds and the family offices and the investment houses. It doesn't matter what, but he actually just in conversations said to me that, you know, family funds and some of the investment houses are starting to adjust their constitutions because the sector has dropped so low that it's actually they can't invest into some of these companies even though they're seeing the opportunity because it breaks their constitutions. So they're now adjusting their people are going to this extent to enable them to position themselves to get commodity, to get capital into the commodity space. Then you know that things sit on the cusp. And that genuinely is the feeling I get. And it feels the same with Panther.
Okay, so I'm sensing a genuine confidence from you, even though you and I are speaking to each other at different parts of the country and it's pretty hot and sweaty. We are in mid-June. So do you envisage that June, July, August are going to be months of you thinking, or is the company going to be doing?
Oh, very much doing. I look, shareholders have been patient, and I'll be eternally grateful for that. But everybody has a point yeah, of action. You can stretch the elastic band so far, and eventually it will break. Well, we're not looking to break an elastic band. What we're looking to do is make sure that we've got a business that can return to shareholders what they deserve to have returned. We've also got a business that we believe we've got a really strong core of assets that have the potential to deliver across the board. So it's now time for me to start delivering. We know exactly how we're going to do that. We know exactly what we're going to do. But what I want to do is relay that to the market in as much detail as I can around these things. Unfortunately, due to regulations and speculation, you can't maybe reveal every last innate detail. But we've set this business up over the last few years. There's no doubts that running into COVID, the market since Putin went into Ukraine has had a detrimental effect. But what we haven't done, we haven't crucified our share structure. So I'm not about to do that now. So make absolutely no bones. And we've got a route through. We know that for instance, we know now for certain that there is capital available to us in Canada. We can raise flow through. There are other avenues for us to raise capital, and people within the network that are keen to support us actually do understand that the next 12 to 18 months are going to be an exciting period, and we've got to get on with it, but we've got to also make sure that we're protecting that share structure around it. So you're not going to see Panther Metals suddenly appearing on every single PR platform and every commentator mentioning Panther. That money will go into the ground. So we'll maintain our lines of communication for our existing structures, maybe bring in the odd one or two, but not many. We're going to be about delivering results.
Okay. That sounds great. It sounds a wonderful platitude. We should end the interview there, but I can't let you get away with that. So you've got to deliver. So there's only, so long that investors will stick with you. I mean, you've got your long-term shareholders, but they're diminishing. So when can we anticipate any news about a delivery?
I would expect to have some solid news flow, depending on events that remain outside of the core structure of the business as it stands. If those events were to develop, then it would possibly delay any delivery of any news. But as a minimum, I would expect investors to understand where Panther Metals is heading over the next 12 to 18 months. And I expect that news to be out to market within the next month.
That's wonderful. Darren Hazelwood, Chief Executive of Panther Metals. Thank you very much indeed.
Thanks, Sarah.